Welcome to another Cardano update. I don't usually post daily Cardano updates, but people have asked me for this, so I guess I have to make an exception. So basically, we went above the first wave high right here, and obviously, like I said, this could still be an overshooting B wave, so basically, we bottomed right here in the main second wave. Well, I cannot confirm that we bottomed, but this is the low so far. And we went up in 5 waves in the first wave high right here. And I mean, the second wave did go to the 0.382 support level right here that I gave you. But to be honest with you, this looks like an A, B, C structure waiting to happen, in my opinion at least. Now, I mean, the second wave could be in, theoretically, but I do not see an ABC down, to be honest with you, and yeah, it's very questionable. Also, the 5-wave move up right here is also kind of questionable, so be very careful with this, and check the 1-hour RSI as well. We're currently overbought, which might mean that we will go and test at least the 50% level right here before going in the third wave. And I mean, that would not be bearish as long as we hold the 29 cents level, which is the 0.786 level, then we are good to go in a third wave up. Now, obviously, Cardano's first wave move got invalidated. So basically, this was a first wave move up. We were supposed to go in a second wave move down to test the support levels. We did do that, but then Bitcoin broke down and the first wave up pretty much got invalidated, and yeah, now we have to pretty much restart it, which is not that good, but if we do manage to do that, then it will be fine. But if we do not, then yeah, we will most likely get another low in the second wave right here. And I mean, we are still below the 0.786 support level, which is not good. And by the looks of it, I mean, we are currently pretty much being rejected by it, so this could be a sign that we will still go to the 30 cents level to test the 50% extension before we go in the third wave right here. And the third wave should ideally get to the 200% expansion at 40.7 cents, but obviously it could go a bit higher, maybe to like 44.8 cents, but I do not want to see it go lower than that, to be honest. So 40.7 cents is the minimum target required for the third wave right here. And I mean, this could theoretically, you could call this the first wave of the third wave, and this is the second wave. So if that's the case, if the second wave is actually in, let's go on the 1 hour for this. If this is the end of the second wave, and if we take the Fibonacci retracement of the low and the high, we get these numbers right here. So as we can see, I mean, the price is respecting the 0.382 extension, which is a good sign. But I mean, this is not a confirmation that the low is in. So obviously this right here is just speculation. So if we do go below the 0.618 level right here, so if we go below like 33.1 cents, then in my opinion we are still in the second wave right here. But if the support levels get respected, then we might actually be in the third wave already. So yeah, we'll just have to see what happens right now. And like I said, if we go below this 0.618 level, we'll pretty much go and test the 50% extension right here. Now, obviously, I mean, the invalidation zone for the first wave move up right here is at like, well, it's exactly at the 0.382 extension. So we could go and test that level, but if we do, I mean, it's going to be questionable because we will invalidate the first wave high right here, and we will also, I mean, it would look like a very weird second wave move down. So ideally, if we go to these levels again, we go to the 50% extension and test it before going in the third wave. So we'll see what happens with this right here. And yeah, we'll see what happens. But like I said, this move looks kind of corrective, and the RSI went to the overbought territory. So I don't know, we'll see what happens. Now, going back on the 4-hour chart, as you can see, we are still below the bull market support band, but it looks like a death cross is coming soon. So basically, whenever a death cross happens, I mean, here, for example, when it happened, after it happened, the price pretty much dumped a lot. So, I mean, I'm not saying that the price will dump, because before this, when we got a death cross right here, the price pretty much pumped like 300%. So maybe the death cross will be a sign that something more bullish is going to happen. So we'll just have to see what happens with this as well. And if it does happen, then, I mean, in my opinion, I think that's going to be bullish because we are already down in the second wave we are very deep in the second wave, and yeah, I don't think this should go on for much longer. And also, I've seen a lot of people complain that the market has been just doing nothing for the past 5 months. And yeah, I know. I mean, that's what happens in a second wave move down. People get bored in the second wave move down, or they get scared because, I mean, the price goes down like 65% and they just sell, and then that's it for them. But in some cases, I mean, not in most cases, after we get the second wave move down, those who actually hold this entire second wave move down get rewarded for it. So even though, I mean, I know there are some people who bought right here, and the people who bought right here, if they hold this second wave move down, they might be rewarded for having patience. And I mean, if that does happen, then we could get to at least like $5 in the cycle and in the third wave right here. Now, I'm not saying that we will go there because we are already very deep into the second wave move down. So if it does get invalidated, if the first wave right here does get invalidated, then I mean, we would pretty much have to restart this whole move. And I mean, yeah, we have seen it happen in the previous cycle right here, but I mean, that only happened because of the pandemic. So, I mean, this would not look good on the chart. And I don't know if you can remember, but I'm comparing this move right here that's happening right now to what happened right here in the previous cycle. And why am I doing that? Well, it looks pretty much the same, to be honest with you. So this move right here, we went up in 5 beautiful waves, as you can see, and we formed some kind of U structure right here. I don't know if you can notice that. Let me zoom in a bit. So yeah, this is kind of a U structure. And if we look at what's happening in this cycle, we went up in 5 waves, and this is also a U structure. So they look pretty similar. Obviously, they're not exactly 100% similar, but I mean, they look kind of similar, so that's good. And also, the second wave moved down. It looks like it's pretty much copying what happened right here. So in the previous cycle, we went way below the 0.786 level, and as you can see, we stayed below there for some time. And in this cycle, we did go below that, but we have not been below that for that long. So yeah, this cycle is, I mean, it could be a bit more bullish than the previous cycle, so that's good. And as you can see, in the previous cycle, the price was starting to go up. And I mean, look at what happened right here. We got a death cross. The price did nothing for like a month, well, actually 2 months. And then it just exploded to the upside. And if you can remember, we are also very close to getting a death cross. So, I mean, maybe something similar will happen in this cycle. So basically, if we do get a death cross, I mean, we could get like another month of nothingness before we actually start going up. Also, going on the weekly chart, I mean, we are still looking very good, and the dump we got right here is not looking that scary when you look at it from a weekly perspective. So I mean, it actually looks very similar to what happened here, like I said. So yeah, in my opinion, there's a pump coming very, very soon. Now, obviously, that's not financial advice. You should do your own research, but we have pretty much been following what happened in the previous cycle in this cycle. And I mean, even the bear market low in the previous cycle was put in before we went up in 5 waves, just like right here. So this is the bear market low. We went up in 5 waves, and this is the previous bear market low, and guess what? After that, we also went up in 5 waves. So yeah, it looks very, very similar to what's happening right now, which is a good sign. And like I mentioned a lot in my previous videos, if we do copy what happened in the previous cycle, then the third wave should ideally get to the 1.618 trend-based Fibonacci extension at $5.30, and it needs to get to at least the 100% Fibonacci retracement of the previous all-time high. And why? Well, that's what it did in the previous cycle right here. So if we want to copy exactly what happened there, we need to do this in this cycle as well. Also, even the RSI looks very similar to what's happening right now. So, I mean, look at this. We went above the yellow line on the weekly RSI right here after the price went up in 5 waves, just like we did right here. Then we went below it, just like we did right here. Then we tested it, just like we did right here. Then we stayed below it for a bit more. Then we tested it again and we fought with it for like a few months, which we haven't done yet. And then the price just exploded to the upside. So yeah, we are currently following what happened right here, which is a good sign. But like I said, if we do follow what happened here, we need a bounce in the next well, let's say like 2 months. So if we do not get a bounce in the next 2 months, then yeah, I don't think we'll be following what happened right here. But yeah, that's pretty much all I have for today. Make sure to check out our Patreon for exclusive videos and if you want access to our TradingView charts. And if you enjoyed this video, make sure to like, subscribe, and I will see you in the next one.